Key indices subdued as global slowdown fears trickle down to India. Banking, financial and metal stocks along with auto stocks sulk. IT sector shines, mid-cap index outperforms.
The fall in crude oil prices to below $54 a barrel fails to lift oil marketing companies. The rupee trades flat and bond yields remain higher.
Infosys rises on the news that a likely $1.6 billion buyback is coming. Announcement likely on the 11th of January along with the third quarter results.
Metal stocks lose their sheen on global worries. Vedanta trades in the red after the Madras High Court rolls back the NGT order, once again downing the shutters on their Tuticorin plant.
The auto pack 2 moves in the slow lane. CLSA expects consensus EPS to be revised downwards for most stocks. Hero takes a bigger knock after Goldman Sachs downgrades the stock to a sell rating. Hi there, good afternoon. You're watching Business Lunch. I'm Mangla Malu. With me is Sumaira Abdi. As we speak for the markets, we have recovered from the lows of the day, Sumaira. Pretty close to the flat line, but in line of or in light with the sort of moves that we saw in the global markets, perhaps the bulls will take it with both hands.
Yeah, it looks like it certainly because, even as we speak, the mid-cap index is now moving into the green. But let's talk about the stocks which are in the focus. Hero Motor, that one's taking a big hit today after brokerage firm Goldman Sachs has downgraded the stock. Even Ambit has retained a sell call. Sonia is here to tell us what's going on with the company and why this slew of downgrades. Sonia.
Yes, in fact, there are two brokerages that have written some disconcerting, notes on Hero MotoCorp. Goldman Sachs has downgraded the stock to a sell from a neutral. They've cut down their target price as well. They met the management of Honda and they believe that Honda is scaling up their market share quite aggressively, because of which Hero Moto is losing market share in the key commuter motorcycle segment. That is one of the key concerns that Ambit highlights as well. I'll come to that in a bit. Goldman Sachs says that bulk of Honda's incremental market share is coming from the commuter segment, and the commuter motorcycle segment accounts for a lion's share of Hero MotoCorp's profitability, because of which they believe that in the near future, the volumes and profitability for Hero MotoCorp will be under pressure. They also say that the recent launches that Hero has had, which is the Destiny, which was the new scooter, and the premium motorcycle Extreme 200R, have not been very successful. These are the exact same concerns that Ambit has as well. Ambit maintains their sell call on the stock with a target price of 2991. They say that the biggest concern is the inability of Hero to retain its market share in both the motorcycle and the scooter segment. In fact, in the entry-level motorcycle segment, Hero MotoCorp has lost market share from the 62% high that it was sitting at last year to about 52% currently. They also say that they've lost market share in the entry-level segment because of aggressive pricing from Bajaj Auto and from TVS's new Radeon. Year-to-date, Hero MotoCorp has overall lost 100 basis points domestic market share to 50.7, and also their new launches in the premium segment, Extreme 200R, has not received a very good response. So it's clearly a market share issue because of which these brokerages have downgraded the stock.
Absolutely, Sonia. The stock down 4% as we speak, but the IT pack is doing well, lending support to the Nifty as we speak. And one of the stocks which is buzzing in trade from that pack is Infosys, and this is on reports that the company is likely to do a buyback. This is worth around $1.6 billion. Rima Tendulkar now joins in with a quick update. Rima.
Yes, Infy is excited. That's because reports suggest that the company could be looking at a $1.6 billion buyback. Now, there has to be a one-year gap between two buybacks. And the last buyback that Infy did, there was a $2 billion buyback, concluded in December, which means after this, the company can announce a buyback anytime, which is why the street expects that when the company announces its numbers on the 11th of January 2019, along with numbers, they could announce a buyback. Now, how did the street come up with this figure of $1.6 billion? When the capital allocation plan of the company was announced at the start of the year, the company said that 70% of the free cash flow will be returned back as dividend, and over and above that, they will also return to the shareholders $2 billion, $400 million, which of that would be via a special dividend, and $1.6 billion they were yet to decide, and buyback could be that the tax-efficient route that Infy may choose to do. This is what was widely speculated by the street, that the company is likely to announce a buyback. Today, there is a report. Of course, CNBC TV18 has not verified the news independently and cannot vouch for it, but it is a market expectation nonetheless.
Rima, thanks very much for that. So we'll wait for that New Year gift, perhaps. But in a setback for Vedanta, the Madras High Court has rolled back the NGT order, which had allowed the company's Sterlite copper plant at Tuticorin to resume operations. This means that once again, the shutters are down. And Nigel is here to detail the impact. Nigel.
Well, that's right. Last week itself, there was some good news that came in for Vedanta because the NGT order had stated that they can go ahead and reopen the Tuticorin smelter. Unfortunately, over the weekend, the Madras High Court has come out and said, no, you cannot reopen this particular smelter. That's on the back of one of the activists who had put forth their complaint. So for the time being, the smelter doesn't open. And the management, in fact, last Monday itself had told us here on CNBC TV 18 that post receiving all the permissions, they'll take 1 to around 2 months at least to restart the smelter. So most of the analysts on the street, they hadn't factored any kind of revenues coming in till the end of this fiscal. Now all eyes on FY20 at some part of the year. Can this smelter be reopened? But for the time being, negative news for Vedanta.
Indeed, Nigel, negative news in the stock taking a knock of almost 0.75%. But individual stocks, they're buzzing around as we speak. The Bharti twins, they're at the high point of the day. Bharti Infratel as well as Bharti Airtel. The market has recovered from the lows. So let's get in some market opinion. Earlier this morning, we caught up with Arvind Sanger of Geosphere Capital Management, who says that India is in a sweet spot currently. He adds that cyclical forces are coming into play for India. Listen in.
We're looking to put money to work. We're not making big macro calls, but we see now the global headwinds. Our central call on a global basis is not for a global recession, although the risks have grown. We have to be careful that we can never say never. But we think that Indian companies that benefit from a global supply chain, there are some companies that are already seeing demand for that, from people diversifying out of China. There are companies that would benefit from that. We see that interesting. And we see some of the domestic, more rural-oriented demand stories benefiting from the spending. The NBFCs, as the liquidity conditions ease, you could see some opportunities. What's happening in terms of the populist measures, it looks like, loan waivers is the mood of the moment. Yeah. Again, I wish there were more strategic thinking because, the only way that you're going to get farm incomes better is by moving a significant portion of the rural population into urban jobs and industry. In the meantime, all you can do is give palliatives like, minimum support price higher, and you can do farm loan waivers and what have you. So, yes, we will take advantage of that in terms of equities that will benefit from that. But from a long-term structural standpoint for India, it does nothing. It doesn't solve the fundamental problem of farm productivity. The cyclical forces are finally coming into play. The GST digestion is behind us. That, you don't get the easy comparisons from the GST implementation, but you get the more kind of normalization of the economy benefits. You get the lower oil prices. I think India is seeing what we're seeing globally, which is inflation is completely dead, and in India it's extremely low from historical standpoints. I think India is sitting in a sweet spot, again, assuming the world is not going into a recession, but is going into a slowdown, and China's slowdown and global trade slowdown are not headwinds for India.
All right, it's time for us to take a quick break, but it's a holiday season, but it looks like the pharma companies are working in top gear. So when we come back, we'll tell you what's happening with a slew of companies that are making news today. Stay tuned.